Good morning, everybody. This is Matador from freetradingvideos.com. It is Thursday, January 31st, 2008. We have quite an interesting opening happening here across the world. European markets down about 2%. We're looking at a pretty nice down open. The futures are down 1.03%. S&P futures down 1.27. NASDAQ futures down 1.27 as well. DAX down 2.58 now. I want to tear apart the broad markets here with you and show you something that's sort of interesting. So here's the S&P 500. This had run down nicely like we've talked about on previous videos, and the stock ran back up, put in a higher swing low after a pretty good retracement, and it was chopping around for a while. Yesterday the Fed cut by a whole 50 basis points, so after a nice run up, kind of released some of the people who were trapped up here. So again, put yourself in these people's shoes. If you had bought any of the broad market stocks that were doing this pattern, or this stock itself, and then sat through this big sell-off, you'd be awfully happy to get a bunch of your money back. Again, that's the definition of overhead resistance, right? That's selling pressure, that's overhead resistance, and that drives it back down. But that upper shadow up in here on this day yesterday does one very, very nice thing, and that is release a bunch of people out of pain. All right, so that actually paves the way for a next move up. All right, sort of neat to know that. Things are definitely bullish. Things are definitely bearish. However, this is a really nice sell-off on high volume. We do have a nice lower swing high, just a tiny bit of strength here like we talked about. This run-up can be perceived as good or bad, at least long or short, strength or weakness. And with this big sell-off now, and the fact that the rest of the markets are selling off, it's a good chance that we head lower today. All right. That being said, I would then go and look for relative weakness stocks. I'm actually going to do that today and post a video on some of those. I put some relative strength stocks up yesterday, and those could be some interesting things to watch over the next few days to see if they can hold up in this environment if the market really does go down here. So I'm going to look at one and just show you how you can do a nice comparison chart. So CNH. I'm not in the stock. I have nothing to do with the stock yet, but it does look like an interesting short setup. Nice sell-off on high volume again, right? Hardly any bounce at all. It's selling right at the $50 mark. You can see that, which is an interesting spot of resistance when approached from below and support when approached from above. And so what I'm looking for is a sell-off today. So what makes me think that this would be any kind of sell-off? Well, I can go back in time now. Let's throw a year up here, and we'll see what we're about to fight into. All right, well, there's a nice gap back in here that has just been filled more than once now, at least partly filled. They usually stop at the first spot. So in this area, it finds support in that gap. Breaks the 200 MA on this big sell-off. Breaks the $50 mark as well. Heads right back down to that area. So now they've taken out all these people who are short, now get a chance to buy to cover. They get another chance to buy to cover again and again. That's the definition of a support, just the exact opposite of what we were talking about. And this guy's lower shadows now pave the way for him to go down. Let me zoom back into 6 months here. There we go. And the upper shadows in here weren't very much. Right, so this has not done what the broad markets have done. And so let's do a quick little trick here. Go to chart settings. Again, Thinkorswim is a great little program for doing some really nice advanced charting work. So we can put the S&P 500 in here if we want. Hit compare. You can do a percentage comparison or price and hit close. And you'll see that while CNH was stronger over the last little while, over the most recent time action, they're actually about equal. And so when I find something like that, and it's about equal relative strength, I'm saying, which one has been failing most recently? And CNH is right on top of the S&P. So if the S&P does roll over here, CNH could follow suit, and it has a good chance of heading down into that area we talked about, which would be that gap fill. So let me get rid of this, delete this guy. Get our symbol back. There we are, and I can zoom back out. So the $42.50 mark. So nice 6-point drop if we could get it from here. If I enter it at 47.50, right? Nice little move from 47.50 down to 42.50 area. That's why I'd be looking to take some money off the table and chase this thing down with a nice protective stop. Of course, just a little caveat here, the market's going to go up, down, or sideways every day. If I put my money on the table here and do enter below the yesterday's low, I know that could tap me in and tap me out the next couple days. So I'm going to size my position accordingly and be willing to accept the loss that I take on this nice try. Alright, so again, this is not a recommendation. This is just one idea about how to look at relative strength and weakness with regards to stock patterns. And again, I'm not in this stock, but just something nice to note. And I will put up a video on some relatively weak stocks for tomorrow. Hope you guys have a great day. Careful out there in the markets, and have fun on the short side or long side. And I'll talk to you soon. Thank you.